Tuesday, 22nd of October. This is the weekly chart. I need to again change other network. Okay, this is the weekly chart. This is then the daily chart. We come from this order block in here. I hope I get rich soon so I can have some better Wi-Fi. There you go. All right. So we come from this order block. Please, 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 please. Okay, so we come from this order block. On top of that, we have this daily volume imbalance, which is that's why I like PowerPoint. I didn't have this shit. This is that volume imbalance in here, and this is primary buy side. This was minor buy side for yesterday, and then today we have this. We had this as minor buy side. Apologize. And then this was clean, very clean, too smooth, but still we were bullish because as we see in the Larry Williams in his book, is that the 50-day, the red one, moving average, the normal one, is 20 days prior to that. Let's measure that. 20 days. We take this point in here, and then this point in here is higher. So now this is the first indication that we want to go long. And then we have the 9 accumulative moving average and the 18-day accumulative moving average. The 9 is the purple one and the 18 is the blue one. And then we have to calculate 1, 2, 3, and we see 3 days prior to that we have the price, we have the 9 EMA higher than the 18 EMA, which gives bullish indication. It's all bullish, everything is bullish. So why look for shorts? Well, if we come to the 15, this is the daily volume, the yellow lines, these ones are the is a daily volume imbalance. As you can see, we close above that, which is a point of resistance. We have a lot of back and forth price action here. See if we want to inverse that, and eventually we do. What is the same as that is the new week opening gap. So then we take the 15-minute chart. We see we have 6 a.m. till 8:15 a.m. and then 8:30 a.m. it purges this sell side. So now we look for longs position, and then this is the breaker block, the 15-minute breaker block. Bullish 15-minute breaker, and we don't even come back to the midpoint of that. And then we have this fair value gap in here, that 15-minute fair value gap in here, and the 15-minute order block. Actually, it's this, the 15-minute order block. As you can see, price respects that. So very high points for a sweep. we see we sweep all this, and then we go higher. And in here we of course enter for a long position at 9:30, somewhere around that candle. But therefore we have to go to this. So as you can see, we have that 50-minute inversive value gap in here. This is the inversive in here. So we draw that out. Boom. The inversive on the 50-minute chart, and then we have that in here. Right above that 50-minute inversive value gap, what is that? The first percentage fair value gap of today. So we draw into that, we go high, we take out this high, and it didn't do so in the ES yet. Let's take this off for a minute. ES. 1 minute. As you can see, the 8:30 price points in here is swept, but it's swept here later at 10:06, and here did it at 9:50. So we have price moving back and forth, waiting for ES to catch up, and at 10 a.m. it does finally what it's supposed to do, and it draw higher. Now we have the range, and the high of the day is 0.5 standard deviation of that. We have a full gap closure, and here we have that fair value gap. We have a high liquidity resistance run. We have a 5-minute fair value gap in here. We draw into that, we draw higher, and then we sweep that very clean, and then we draw higher. We don't get this as target, just not. So I'd be stopped out in profit here, in break even here. And then in here, this is what I've seen multiple times. We sweep this, and then we go lower. We do that inefficiency. We draw higher. Not essentially sure if I want to be associated with that price action. But it does really have nice influence of the new day opening gap. So we draw lower, we have an SMT in here, the Dow went higher, the ES went higher, and we have this, an SMT, and we have the breaker block and the 15-minute order block we mentioned just before. So that's it for today.